All right, howdy folks. This week in crypto, March 11th, 2022. It has been a mostly boring, and this is the first time I'm saying that in a while. It's been mostly kind of a boring week for crypto. Obviously, not quite flat. Most prices have moved down a little bit, and we're going to jump into exactly why that's occurred. There are several reasons in our opinion, and the fundamental metrics are indicating that there are some decent signs that things can turn around, but also some concerning signs that stagnancy has kind of taken over while people sit on their hands and wait for the real world events to settle down a bit. And we had a poll go up on Twitter about 3 to 5 minutes before this call started. We will also have another one here on our YouTube chat about halfway to 2/3 through the call. So look out for that. Right now, we're seeing that Cardano is an asset that a lot of people are interested in. Also, some hits for Luna that's in the replies of that poll right now. So we might take a look at those two. But as usual, we're going to take a look mostly at Bitcoin with a little bit of Ethereum sprinkled in, and try to cover as many topics as we can here in this hour to hour and 15-minute stream. So for everyone here, thanks so much for joining. Glad to have you here. It's always great to continue to see plenty of chatters and interested viewers, both Sandbase Pro and free members alike. And as always, I want to remind everyone, our goal here is to sort of comb through the data and see what we can see based on history and the kinds of divergences that we typically see when local bottoms or local tops form. By no means are we giving investment advice, but we do have no problem pointing out when something looks to be at an extreme for those aforementioned divergences that we usually look at. So we'll do our best to navigate with you. Feel free to ask questions. One thing I recommend, with us now being in the third month of me, being without Dino and on my own, is plenty of questions popping up. And that means, Balresh, our great stream administrator here, he can feel free to jump in at any time and let me know what kind of questions are coming in and whether more clarification needs to be had for a certain topic. And I'd love to make it more interactive and engaging rather than me kind of just narrating the whole time. So don't hold back on that. Feel free to ask questions at your convenience. And I'm here to help any way I can. And even after the stream's over, as you guys know, we have a Discord server with great conversations happening all the time about where the markets are heading next. And I encourage you guys to join in there if you haven't done so already. So all that said, here we are looking at the last week of price percentage change for the top 100 or so market cap assets. Bitcoin over here, it was sitting just above 40K, around 41 at the start of the week, I believe. And now it's back down to 39.3. Modest 4.6% loss. Certainly not the greatest thing in the world if we've been bullish on Bitcoin, as most of you are. Ethereum down 3%, down to just above 2,600 at this time. And then we see a few outliers that have been doing pretty well. The top performer amongst top cap assets, if you want to call top 100 or so top cap assets, would be Waves at plus 37%, Zcash at 26%, and Stacks at 30%. So those 40 ranked 40 to 50 or so market cap assets have done pretty well. At least, right around this section, we saw a little bit of positivity. If people request a few of these assets, I'd love to figure out exactly why. Arweave was the other one that was in double digits at about plus 10%. And then it looks like around 80% of these assets were in the negatives, with, lowlights being Phantom, which we had a great insight released just yesterday about what's going on with Phantom and Andre Cronjes. I hope I'm pronouncing that right. His exit from the project. There's been a bit of confusion and discussion over whether the projects are completely abandoned. That is definitely not the case. Phantom, Wi-Fi, Keeper, these assets are definitely still being worked on, but just without Andre Cronje's leadership and participation now. Regardless, the reaction has been swift, and Phantom took quite a nosedive immediately after that news hit. Even prior to it, I believe it was already dipping pretty hard compared to the rest of the markets. We also see that Anchor Protocol took quite a dip, which I have far less information on why that happened. So overall, it looks to be a modest down week for crypto. Obviously, we're now about 2.5 to 3 weeks into war between Russia and Ukraine, and as we all know, that has had a significant impact on crypto markets. Initially, it was a huge downturn followed by a surprising, depending on who you are and what you were expecting, a surprising uptick that caught many off guard. At least according to our data, people were not expecting it. And then it kind of fell right back down below 40K after getting nearly to 45K. I think it got to about 34, even slightly below 34 right when the war news broke. So obviously there was a ton of volatility over the past 2.5 weeks. And now that volatility has at least relatively settled down a little bit. So we will look into Bitcoin metrics in just a moment. Right before we do, I want to remind everyone of just our main homepage and all of the great features that we have here. Obviously, we can see our own little stream here in the corner, which is awesome. So when you're live, you'll be able to see, whether we're doing a stream ourselves or there's some video content you may want to check out. I can close that. You can look at the conversations over here that are happening with our insights, which you can find here, and you can see all of our recent stuff. So conversations going on there. You can actively participate and respond to the articles that we release or our community members release. We also, of course, have specific chart layouts, which you can open and see exactly, what the Bitcoin versus S&P 500 versus gold correlation looks like at any time, whale absolute values for Bitcoin or another coin that you have interest in. We, of course, have NFT influencers, what they're doing, major players like Pranksy or Cryptopathic, Dan Verno, see whether they're buying or selling, how much it was for, what marketplace it was on. That's extremely useful if you're very much into the NFT scene. Exploring screeners, we of course have many. Exchange inflow anomalies is a huge one, mostly for catching tops when you see a huge wave of coins moving onto an exchange. Huge opportunity to find a quick spot and take profit, essentially. You can look at metaverse assets and see how they're performing with various volume changes, market cap, etc. Strong and oversold. This is probably our most popular one. This is where we specifically find assets that are showing a few bullish indicators compared to what their market cap currently is sitting at. So we can see quite clearly Loopring, Strong, Decentraland, Kronos, GALA, SushiSwap. They're all on this list for now. And if you wanted to look at exactly why in more detail, you can click on this and it would open our screener just like this, but with a filter on showing only those assets that have those qualifications for meeting strong or oversold. And then, of course, we also have daily active address anomalies, which means they simply qualify due to the fact that they're getting a huge influx of unique addresses that are interacting on their network. So all of these are really useful on the screener side. Of course, you can scroll down and see our top 10, our social trends, to see which keywords are being discussed at a high frequency right now. That can have tremendous use for seeing where markets are heading next. Obviously, the prices of any assets tend to go the route of least expected by the mainstream crowd. So if you see the mainstream crowd talking about Polygon, for example, or Luna or Cardano, these are the 3 assets that are currently in our top 10 for trending and rising keywords. So whether they were moving up or down when they were currently starting to trend, usually this is an indicator that Matic, Luna, or Cardano could have a reversal right now, depending on what that topic is about. And you have the connected words over here. It can be extremely helpful to have this kind of context when making decisions on your trades. So our community really relies on that top 10 social trends countdown a lot. And then we also have key stakeholder signals. That would be, things like whether a project hit trending words, they hit a new all-time high, coins that have been dormant for a while finally moving, a massive exchange withdrawal, or deposit. So you can, right now you have all 5 highlighted, but let's say I only wanted to look at large exchange withdrawals, that would show up here. You can unfold them for more context. Charts gallery, templates to see exactly what a coin's health looks like, all in one chart. Social volume, all sorts of stuff. Video insights we've done in the past. We did a recent one on the initial reaction to the Ukraine and Russia conflict, and then all sorts of things related to our weekly reports, funding rate, all sorts of stuff. I encourage you to just explore our homepage if you don't already do so, because so much data and information is here that I can't possibly do it justice by summarizing it on our stream here. So check it out. And all that said, we're going to move into the metrics now. By the way, any early questions that are popping up, Balresh?
All good so far, I believe.
Sweet.
Oh, it's about the heat map view. Could you show how to enable it? In the
heat map view.
In the screener, in the what we were looking at initially.
Oh, sure. Yeah, of course. So
yes,
all you do to get up this perspective, guys, is you're going to open up our infographics button right here, and you'll see price tree map and price bar chart. Enable those, and you'll see both pop up. So I can disable, they're gone. Price tree map, which I think someone's referring to as our heat map, that's right here. And then having the bar chart also is right here. You can even have things like the social volume tree map, which is interesting. So that's a little bit different than the price returns. And you can actually see how much projects are being talked about compared to their norm over the last 24 hours or last 7 days or last 30 days. So you can see social volume overall is really starting to tick up a little bit. There's a much less discussion related to Tether. I think last week was very heavy Tether, so I'm not surprised by that. You can see extreme upticks in things like Luna, XRP, Cardano. Cardano especially seems to have had a huge uptick, so I'm not surprised that our early poll results are indicating that that's a popular asset that people want to see more discussion on. So yeah, you've got your social volume change heat map there, and then market cap and volume also. I can go down, and that would basically just show, the overall change in market cap and the overall change in volume based on any assets you have highlighted. Right now, there's no filter on, so this is essentially just the overall market cap and volume for crypto over the last week. All right, so enough said on the screener for now. If we need to go back, we will. But let's jump into Bitcoin, and for the next 15 to 20 minutes or so, we'll talk about that, as well as a few models that are showing how the overall crypto landscape is looking. Beginning here, we'll look at circulation and exactly what's going on here. We can see the 1-day, 7-day, and 30-day circulation trends are all showing on the same chart. For simplicity, I'm going to take off the 1 day and only look at the single days and see what kind of spikes are showing up here. We had our biggest spike on February 28th. And on the 28th, we saw basically the largest circulation spike since October. It was massive. And interestingly, this noted basically a local top that occurred the next day. That's very common, even for Bitcoin, the largest asset in crypto. When you see one anomaly spike, it can often be dormant tokens moving for the purpose of selling on exchanges. So very likely this correlated with a big exchange inflow. So that's why that occurred. Circulation can really be helpful in lining up against the context of another metric. So, obviously on its own, it can be a very good long-term indicator, especially when there's like a significant rise or a significant fall, which we haven't really seen. Obviously, it's been mostly flat, but utility really is key when it comes to any crypto asset and the future price direction that we can expect it to show. Circulation along with daily active addresses are probably our top two in that regard. And right now, it's interesting because we're definitely seeing a long-term rise ever since mid-August when things were really bottoming out here. It's clearly moving up, but is it moving up enough to justify that the long-term outlook is looking pretty good? Well, according to our model here, the NVT analysis model that really simply measures the amount of unique tokens on a network versus the overall market cap at that given time, it's showing that we're in our 6th straight month of semi-bullish territory, this yellow-green color. That means that based on where the market cap currently is, there is a better than average likelihood that it is healthy enough for prices to rise. This comes after a long stretch where we were actually in bearish territory. And during this bearish stretch, we of course initially had our all-time high the second month of bearish territory, but then of course we had that massive fall off. That's pretty normal, right? We can't just expect that as soon as a red bar shows, everything falls off a cliff. That's why we look at this as a long-term indicator instead of short-term. It's definitely indicating that right now, after this stretch of red, we got right back to impressive amounts of circulation that were showing that it was actually justifiable to have these prices that we were at, especially when we hit October and November and had two more respective all-time highs. And then things dropped off very quickly, which is surprising, right? Because we were still seeing semi-bullishness going on. But, really the true reason is the fact that there was already starting to be inflation talks here in December, that is. And also, we were starting to see whales take profit right here at the end of October, which is interesting. So even though NVT tends to be quite accurate, red bars tend to have things go down, green bars tend to have things go up. There have been a lot of external factors that have muddled the data a little bit. That won't always be the case though. And I still wholeheartedly believe that this model can have a lot of promise and alpha in terms of where markets go next, given enough patience. So right now, I still think this is a very good sign that circulation is looking healthy in the regard of a simple calculation between the unique amount of tokens and where market caps currently stand. So circulation overall, especially if we go back to like the last year, you can see why it's showing semi-bullish territory ever since August and September when things were really low, even going back to June, July. So moving on to daily active addresses, it's not quite painting as good of a picture, right? We saw very, very high amounts of addresses interacting on the network. We were consistently seeing well over 1.15 million active addresses per day, even some over 1.2. We got to 1.36 right after the initial all-time high in 2021 hit, right above 64K, before we really started to drop off a cliff. Had one more try to push up, and then boom, we fell off in mid-May. And you can see just how much the daily active addresses proceeded to suffer as a result of people kind of sitting on their hands and not knowing exactly what to do after that huge correction occurred. It actually got to below 30K just barely at its lowest in mid-July. And ever since then, things picked up. The pink trend line here, which is the 30-day trend line, that started to pick up as well. But it peaked right around here in early November, right before the true all-time high that was actually well above 68.8K. I think 68.8 was what it was, give or take. And we had the trend line get to about 960 to 980 thousand daily active addresses per day before things started to tip down again. And that's not the best thing. So if we were to plot daily active addresses on the same kind of model that we just showed for NVT, it wouldn't look semi-bullish. It would likely be more on the neutral end to even semi-bearish, which sort of cancels out the optimism on the utility end. That being said, it hasn't tipped down quite as much as we saw back when things were really looking rough in July. And right now it's kind of a wait and see thing where we're just kind of going, when will the daily active addresses start to be above 1 million again? That's of course an arbitrary number, but one that we've usually seen as an indication that a mini or long-term bull run is starting up again. So we've seen a few of those for sure. We had at the end of February, we had 3 or 4 straight days where the daily active addresses were above 1 million, but it hasn't quite stayed there. And obviously these big gaps are usually weekends. So don't take them too seriously, because weekends always have a slowdown in circulation in daily active addresses. But overall, this 30-day trend line is the one that I like to look at, and much of our staff likes to look at, as a sign that things are finally starting to heat up or slow down. And right now it's still mostly a slowdown. So that's it for the utility. Now we'll take a look at another top 3 indicator, in my opinion at least, and that's our 30-day MVRV indicator. 30 days is kind of a midterm, slightly short-term swing trader time frame. And what MVRV does, for those not familiar, is it will measure the average trading returns of any trades or entries into the market in the last 30 days on the Bitcoin network. So when trading returns get high, you typically see a higher likelihood of a correction. And that's, even just in the past year or so that we're looking at here, that example has played out pretty accurately most of the time, especially when things get above 15% there. That's kind of the top signal, right? Once we hit here, some correction occurs. If it's below that plus 15% threshold, but well into positive territory like here, it still means that there's an increased likelihood of a correction happening. So by all means, you certainly don't want to just wait for it to get above this threshold. This is just kind of an extreme sign that things are going to turn around soon. Same goes for the other end, right? So I can mark the negative 15% end, and boom, that tends to be when price bottoms occur. So if you're looking for a nearly sure sign, or at least very increased sign that prices will turn around and it's time to buy, that's your spot to do so. And you can see that on all 3 of these spots, there was a clear buy signal, at least for the short term, sometimes for the midterm, sometimes for the long term as well. And right now, looking at where we're standing, I'll zoom in here just so we can look at maybe the year to date thus far, beginning on January 1st. Right now, we're sitting with the MVRV at just a very modest negative 2.5%. That's pretty much meaningless. We can consider that neutral for the most part. Maybe once we get to like negative 7% or plus 7%, that's an indicator that we're really starting to get to toward an extreme buy zone or an extreme sell zone, but it's neither right now. All things considered, this is a very slightly better than average time to buy according to average trading returns on the 30-day scale, but I wouldn't put too much credence into that, especially going into the weekend where volume and activity tends to die down a bit. There could be a little bit of a waiting period before an extreme shows up again to indicate a clear buy or a clear sell is opening up. So MVRV is looking pretty much neutral there on Bitcoin, but we have this model that can give a little more context. Let me turn off my notifications because I'm getting a whole bunch of them right now. Okay, that'll be better. So on the MVRV side of things, what this model does is it'll actually measure not just the 30-day by itself, but it'll also include the 1-day, the 7-day, 90-day, 180, and 365-day average trading returns for several different assets. Bitcoin, we see right here, showing as neutral. The higher up it is on this model, the better of a buy opportunity it historically has been when it hits these kinds of MVRV, average MVRV scale marks. And when it gets to this green dash line here, the opportunity zone, that is essentially like a top 10% historical spot where you can buy. Conversely, if it gets to this red dash line, that's a top 10% opportunity for you to take profit and feel confident that prices will correct downwards, at least temporarily. So we can clearly see that the trend right now is still mostly bullish all the way across these top 100 to 150 market cap assets that we have MVRV data on. So with the exception of Leo, which appears to be close to the danger zone at the moment, almost everything is much closer to the opportunity zone right now, with Bitcoin looking mostly neutral. That still opens the door for a lot of assets that are showing in the underbought zone, like 1inch, like Aave, Compound, Phantom, Loopring, the Graph. Those are amongst just the really top large cap assets that are in extreme territories right now and could be a good opportunity. By all means, these are still going to depend on how Bitcoin performs, which is why we need to look at as much on-chain data for Bitcoin as possible to assess how that health is looking. So we can jump into that more in a sec, but I thought it would be important to give you guys an update on just the MVRVs of altcoins that are mostly looking better than Bitcoin for now. So between Bitcoin on its own and altcoins, it does appear that altcoins are the better bet, assuming Bitcoin can stay stable. But if Bitcoin collapses and falls further, all of this is pretty meaningless because it's going to, all the altcoins are still going to follow Bitcoin's lead, and Bitcoin has to stay stable or slightly rise or significantly rise in order for altcoins to be able to thrive and surge again. So going back to the Bitcoin charts here, we've covered MVRV, we've covered on-chain utility, and now we can look at other things like funding rate and some of the social stuff. Beginning with funding rates, I'm going to take off everything except for Binance, because Binance tends to give us a good lead on exactly how traders are longing versus shorting at any given time. The trend right now tends to be mostly neutral. Right here at 0.01%, this is actually the resting state for funding rates, meaning there's not really any significant longs or shorts going on. And when it goes down here, that actually means that there's a significant amount of shorts going on, and people are betting against the markets and assuming that prices are going to go down, so trying to make a profit if Bitcoin corrects. Usually when you see these spikes downward, prices go up and those shorts get liquidated. You can see very clearly on the 24th, right when war announcements were breaking, that's when people were shorting and they got burned. You can see again here on the 27th, big shorts were being placed. They all got burned, not all, of course, but many liquidations occurred. And that's not always the case, right? The more significant the spike downward, the higher chance that prices will move up. So keep that in mind. The same goes for really high funding rates. So if I zoom out here to the last year, you can see some of the extremes better. And we can see, you know, when people were really longing up here in mid-November, right at the all-time high, boom, a lot of long liquidations occurred. Even back here too, huge long liquidations, huge long liquidations. Those are kind of the spots where you want to avoid having your portfolio allocated heavily toward Bitcoin, because of the fact that you're at high risk with so many leveraged longs going on, betting that prices are going to continue moving up. So long story short, right now, we're not really seeing any of these high spikes. It's mostly just low spikes, indicating people are trying to time shorts and mostly getting burned whenever they try to do so in an extreme and unified manner. So ideally, we would like to see kind of a sustained amount of shorts, enough where prices can move up significantly, but mostly when people try, they quickly get neutralized and funding rates go back to 0 to 0.01. So funding rate wise, it's still a good sign or better sign than average that there's no extreme longing going on, indicating any euphoria or mass amounts of dip buying, expecting prices to go back up here right now. If people were expecting that in masses, it's more likely that it wouldn't happen. So it's good that they aren't expecting it right now. Oh, and one other thing for funding rate, we have a model for it. So you can look at individual assets and how they're looking compared to, you know, just Bitcoin, which would be right here. You can see that its average funding rate right there is pretty much right at 0. And this is combining the funding rates of Binance, FTX, DYDX, Deribit, and BitMEX, all in the same blend together to produce basically an average of 0 right now. But you can see that not all assets look like that. You know, IOS token at negative 0.009, that looks to be one that's being shorted a bit right now. REN is shorted right now. Small Love Potion, Storage, Waves. Many of the assets that see like a price surge, those are the ones that traders are savvily trying to short because they don't think those price surges are going to last. But the more shorts you see on those surging assets, the more likely it is that that price can actually continue to rise because too many people are shorting it and they can easily be liquidated, which will only fuel the fire of a further price surge. So keep that in mind, and you might find this kind of model very interesting. You can also see the average funding rates for Bitcoin here in blue, or the average altcoin funding rate overall here in purple. And the further down you see things go, the more likely it is that there's going to be a price rise. So you can see that when funding rates were in positive territory together, that's when prices were moving down. And when funding rates were super negative, I wouldn't say super, these are pretty tame funding rates that are just barely above and barely below 0. But regardless, over the last 48 hours, which this chart is showing, you can see that prices corrected when funding rates were positive and jumped up a little after they went negative. So that played out quite well and shows the power of this kind of funding rate chart. So just a little extra share there on the funding rate model. Let's move back to Bitcoin and look at some more metrics now. I'll take a quick pause and a drink of water, and Balras can tell me if there's any more questions or follow-ups to anything we've talked about.
No, not so far, but let me mention that I'm gathering assets for the poll that I'm gonna share soon. So please let us know in chat what you're interested in.
Thanks, man. Yeah, guys, feel free to throw in your vote or suggestion on what we can look into toward the end of the call here. We'll try to get to as many assets as we can. So next up would be supply and exchanges. We're looking at the past year of data. And what we're seeing mostly is a continued move downward. We were sitting at about 14.1% of Bitcoin on exchanges 1 year ago, and we're now down to 10.65%. So we're talking about a pretty significant drop of 3.5%, give or take, moving off of exchanges, Bitcoin supply, bits of Bitcoin supply, that is. When we look at the more zoomed in perspective, we do see that it's kind of flattened out a little bit over the past few days. but overall, you know, it's still moving mostly downwards. So I wouldn't be too worried that like things are tapering off and exchanges moving back up. It's always a possibility, but we like to look at this metric because of the fact that it has a good long-term leading alpha aspect to it, due to the fact that the less coins or percentage of coins that are on exchanges, the less likely there can be major sell-offs, because, you know, obviously there are many things that can cause prices to move up or down, but one of the big causes is you know, a whale sell-off, where they have a lot of their supply and exchanges decide to make a big sell, and suddenly, you know, prices fall off a cliff. But we haven't seen that kind of occurrence happen, or at least be as likely as we've seen historically, due to the fact that this line has just continued to move down. So when you see an inflow of coins moving onto exchanges, that's usually something to worry about. Like we saw here, for example, this would be the kind of red flag where we'd have some alarm bells going off telling us, you know, prices might be in danger. We had, you know, the supply sitting at about 13.6% on April 21st, which was about 10 days after the initial 2021 all-time high occurred. And it moved all the way up to 14.3. So an extra 0.7% or so of Bitcoin moved onto exchanges. And sure enough, we had this huge drop off, and it continued to drop off until, you know, supply and exchanges moved healthily below where it was before the rise started, basically. So I found that to be a really nice leading property for Bitcoin at the time. That being said, we of course still had plenty of drop-offs occur even as supply on exchanges was moving down. So this is of course only one metric to rely on, and is certainly not the one to solely hold on to as an indication as to where Bitcoin's price is going to go next. But another very important indication as to where Bitcoin's price will go next would be the whales, specifically those holding between 100 to 10,000 coins in their wallets. And right now, it appears as though whales aren't really doing much. They have had a very slight rise here in the last 2 weeks, 2.5 weeks, I should say, right after war broke out, right around the 23rd and 24th, depending on what time zone you're in. They were holding about 48.25% at that time, and they're up just modestly at about 48.4% now. So they've added about 0.15% of Bitcoin's entire supply back to their wallets. The reason we look at the 100 to 10,000 range is because this tends to be the cutoff right before we have, you know, significantly exchange addresses that don't really move and don't have active traders that are moving that quantity of Bitcoin they're holding up and down to try to catch tops and bottoms. Exchange addresses are there just for the sake of holding balances, so there's plenty of liquidity in the exchanges. So those tend to be irrelevant, but the 100 to 10,000 range, that is still majority, based on our research, not exchange addresses and actual traders that are looking to take profit and accumulate when they believe the price is at a juicy range for them to accumulate more. So, you know, the long-term trend shows, as I mentioned earlier in this call, that October, late October specifically, was the peak in which whales were holding nearly half of the supply at about 49.5%. And they've been taking profit pretty consistently since then, with, you know, a few upticks here and there. But until we're starting to see ranges that were where October was again, it's going to be a little bit dicey due to the fact that those major players have shown less confidence in Bitcoin than they were back in the early part of Q4 2021. So we can even zoom out here to give a little more context. We'll do like the last 3 years and show how that's looking. So this gives a much better picture as to why prices are still much higher than they were, you know, back in March 2019, when we were sitting around $4,000. the supply held by these same whales was only at 46%. It actually got down to 44.95%, and prices were, subsequently declining, even though they quickly accumulated right here. So, this is the kind of thing that we would be worried about, a huge slope down, which kind of matches what we saw right here just prior to the all-time high. But overall, the long-term trend, at least between 2020 and early to mid 2021, was a huge accumulation here, and you can see how price reacted to that in subsequent months. I would just try to stay zoomed out as far as perspective that Bitcoin still has long-term validity for staying above like a 30K level. So like as long as supply distribution really doesn't start to hemorrhage and fall down here again, it's a good sign that we're not going to really fall off a cliff. But you can still look at like midterm changes and even short-term changes to try to catch a few bottoms and tops that are being dictated by these large whale addresses and what they're doing with their bags. Any quick questions on just those two subjects, Balresh, that you're seeing in the comments?
No questions so far. And also not a lot of input for our assets. So please, guys in chat, share the assets that you're interested in, and I will post the poll in about 2 minutes.
Sweet. Thanks, Balresh. Let's look at a few more here for Bitcoin. We've got exchange flow balance. I'm going to zoom back into the last 3 months. So what this metric does is it will look at the difference between overall inflows and outflows on a given day. We can I like to look at it more like in a week span because I think it's a good long-term indicator. And we try to look for extremes. Obviously, one big extreme is showing on this chart, and that was in late January, which was near a bottom. And you can see a massive amount, about 134 to 135,000 Bitcoin were moved off of exchanges net-wise during this week. And you can see what happened the following week. There's a reason why we like this as a good leading indicator, as there's generally a reaction to huge spikes downward or huge spikes upward. And this huge spike downward indicated that there was less sell-off risk due to the excavation of Bitcoin away from exchanges. Prices surged. And yes, we've still seen mostly outflows ever since, but nothing extreme. So these aren't really that important of indicators, maybe in kind of a long-term perspective. But if you're looking for short-term alpha, it's really these huge extremes that I think are most useful for those swing trading opportunities. We can zoom out and see plenty of high spikes as well, especially earlier in the year. And my favorite leading indications on this chart for the take profit side happened from late April to mid-May, where you saw 4 straight weeks of massive spikes of inflow, where Bitcoin was moving on to exchanges. There's really only one reason why coins are moving on to exchanges, and that is for the purpose of selling. Yes, some can argue it's for DeFi related reasons or other reasons I won't get into. But overall, when you're seeing these big spikes upward, especially for multiple weeks, generally a warning sign. And that's exactly what occurred in mid-May here when prices really corrected downward. So you see it both ways. These extreme outflow spikes can be really helpful, and also the inflows. Right now, we're seeing modest outflows week after week, and that's a semi-bullish sign for sure, and a justifiable reason to be in Bitcoin. Network realized profit loss. A little bit of interesting stuff has happened. We have seen some positive spikes showing that the realized profit has been on the positive end, and a lot of people are taking profit at these levels, basically selling off and doing so while in profit, which is what these high spikes mean. And then when they sell off here, when the low spikes are, that means they're selling at a loss. Generally, selling at a loss on the network is a bottom indicator, and selling at a big profit is a top indicator. It doesn't always work perfectly, but if you zoom out, it gets a little bit more helpful, just like the inflow graph. Clearly, we had a huge network realized profit loss spike upward with 10.04 billion occurring this week in mid-October. Same here. So these were big top indicators. You can see the top indicators here too overall, and bottom indicators here. Huge bottom indicator. This was the largest in the last year. That worked out perfectly if you saw this network realized profit loss spike. Even this one here might have been a nice sign that you could at least buy low for the temporary interim. But overall, it's mostly even at the moment, relatively looking at these huge spikes over the last year. Not too much special is going on. We saw a few very short-term profit spikes in the last week, but they've mostly stayed neutral. But I would keep an eye on this, especially if you just zoom out to the week perspective. It can give you some nice alpha in terms of when things are starting to show an extreme end of the spectrum in terms of a take profit or buy opportunity. Development activity, not really much to say there. Bitcoin has mostly stayed flat, if not moved down a little bit over the past year. Social volume and dominance. So we'll hit on this one, we'll hit on weighted sentiment, and then we'll start getting into some questions. So social volume overall for Bitcoin, which we can see here in blue, it's mostly moved down overall since early December, when it really was spiking a little bit as people were talking about the big free fall that was occurring at that time. What I think is more important would be the dominance. I've talked about this on previous calls. When the percentage of discussions related to Bitcoin versus the other top 100 assets is rising, that's generally a good sign. And when it's dropping, that's generally a concerning sign, because that means there's too much discussion related to altcoins going on. And generally, we want to see a continued interest in Bitcoin, the coin that is keeping other coins afloat and giving them the ability to surge or fall if discussion rate is starting to drop off. You can see a really nice top indicator was starting to occur in late October. This was a huge altcoin boom at this time. Even though Bitcoin made an all-time high, there were tons of altcoins that were making even larger percentage-wise all-time highs. And because of that, we saw social dominance on the 19th sitting at up to about 32%. And right after the all-time high, it was actually down to 10.1, 10.2%. Got as low actually as 9.5%. So got below 10%. That wasn't a great sign for Bitcoin's future. And sure enough, right after that huge bottom in social dominance, prices dropped off a cliff. Dominance has moved up a little bit since that time, but nothing meaningful enough for us to be super excited that things are going to start returning to plus 20% plus levels. We can see that over the last year, let me do like even the last 3 years again. 2019. So when things were really getting high here and super healthy at like the 25 to 30% level, even 40% at a few points, look at how prices were absolutely surging. This was when Black Thursday occurred here in March 2020, just about 2 years ago. The prices were absolutely soaring at this time. So if you bought in right at the bottom while social dominance of Bitcoin was really high, you can see here in the top left of my screen how the price returns are just getting higher and higher. At its peak, the local top that occurred in mid-April, you would have made plus 1,030-ish% on your Bitcoin returns if you bought in right at the bottom when Black Thursday occurred. Of course, that was easier said than done, and many people had no idea how to react to a pandemic. But you can see that because social dominance was high, that was nice, a nice confidence booster that things could rise higher. We did have this anomaly here in December of 2020 that didn't really affect prices for those of you looking at this with a microscope and wondering what was going on there. That's why I think that just like the other two metrics I just showed, having more of like a week perspective can give a little more context. You can even do filled area here to get a little bit of a better view visually. And you can see that just the trend overall was looking up. You can even add, something like a 30-day moving average and see that really just the perspective of how high it was for most of the last 3 years versus where it is now. So, social dominance overall, not a great sign. We'd really like to see Bitcoin's social dominance pick up as a confidence booster, as I just referenced, for Bitcoin to start heating up once again, and subsequently the rest of the markets. Finally, before we take questions, the last chart we'll look at is weighted sentiment. I'm going to change this to a week perspective. We're looking at the last 3 years still. And right now, it does look like we're seeing a bearish sentiment overall from the crowd, indicating that people aren't really big believers that Bitcoin is going to explode upwards once again. That is a good sign, and it means there's an increased chance of Bitcoin doing exactly what the crowd doesn't think will happen, explode upwards. It's not at an extreme level, like we saw here in September 2020, or of course Black Thursday which I just mentioned, even July 2021. These were the signs that prices could really take off. We did see just last week that we were at an extreme level, and the weighted sentiment was particularly low after it got up to almost 45K and then fell below 40K once again. People were just like, whatever, Bitcoin just is not a good investment right now. And then it saw another bounce, and it's kind of neutralized for now. We are still in slightly negative territory, which is a good thing. People are showing signs of FUD and fear, uncertainty, doubt to a modest degree, but not enough where we would say this is like a ultra fear indicator and it's time to jump in because the weak hands are hemorrhaging off of their funds right now. So I would keep an eye on this. I think weighted sentiment is a top 5 alpha indicator for any asset, and it's something that many of our staff are particularly fond of. So overall, definitely no euphoria like we were starting to see here in early February. This was a couple of weeks before the war announcement broke, but it's not enough right now for us to be super excited that the crowd is getting fearful and it's time to jump in. All right, I'm going to take another sip of water. Without Maxim here, it's a lot of talking for me, so I apologize, guys. Balresh, if you want to go ahead and read off a few of the top poll results, we can get to them. I'll also hit on Cardano a bit because the Twitter poll indicated people want to see that some more too.
So right now in first place is Cosmos, Atom, followed by GALA. Name
All right.
is the same for GALA.
Cool choices. Yeah, two that we haven't really looked at too much on our streams here before. So Cosmos, Atom. Fair warning that this is not an ERC20. GALA is, so we'll have more metrics on that one next. But for Atom, we're going to be limited here because circulation, daily active addresses, MVRV, none of those are available. That's just, due to the nature of Sandbase right now, we only have ERC20s or a few non-ERC20s like XRP, obviously Bitcoin, Litecoin, Binance Coin, among a few others. Cardano, we do have plenty of metrics for that. But for Atom, we'll keep our focus to things like funding rates and some social metrics, and we still will have some good information that'll help those traders who are keeping an eye on this asset. Right now, like a lot of other assets, the Binance funding rate is indicating that we were in an extreme positive range in mid October, and it stayed that way all the way up until early November, when things started to die down here, you can see how the longs kind of stopped. We had one more extreme spike here when people were optimistic that this was kind of a quick correction and then another bounce where people are expecting another rise. They were incorrect. One more here where they tried to time the bottom. They got out too early though, and then we saw this price spike upwards and then a huge wave down, just like the rest of the market's direction in December. And it stayed pretty neutral. And then notice the big shift here, right? Like we were no longer seeing the positive spikes, people trying to leverage long Atom, and suddenly people were trying to leverage short Atom. And that's pretty typical with a lot of altcoins right now. It's certainly not exclusive to Atom, but it's interesting to see that in January when things were starting to spike above $40 again, everyone was shorting. People were not even touching the prospect of going long here. In fact, the last time we saw any long spike was December 1st. So we're talking about over 3 months since the last time there were some serious contract funding rates showing positive. So with the spikes mostly short right now, it's a better sign than average that Cosmos/Atom can move upwards. We did just see, as of yesterday, the 10th, the largest negative funding rate spike since early January. So pretty much the second largest in at least the last 6 months. Let me zoom out to a year to see if there were anything else. Yeah, we had one huge anomaly here. I think funding rates all over Binance looked like this. I'm not sure why that occurred, but that was kind of like a crazy flash in the pan where we just saw tons of shorts going on. Overall, though, zooming back in, it does look like this huge funding rate spike downward that is still very negative right now is a promising sign that people are trying to short it way too heavily right now. So Atom, at least according to the funding rate side of things, is definitely looking bullish because this can very much be primed for some short liquidations that can add rocket fuel to a surge upwards. Let's take a look at whale activity. Oh, we can't, my mistake, because it's not an ERC20. So we'll skip on that. Development activity, that's definitely an interesting and applicable metric to look at for a non-ERC20 asset. Over the last year, it's kind of wavered back and forth. It does appear, scrolling across here, let me do 1 day. Scrolling across, if we look at the top left of my screen, this bubble that keeps moving back and forth, that it won't let me touch, it's pretty high. This is a very highly developed asset, and that's a great sign, indicating that it has a team behind it that believes in its future, and it's not just sitting with not much innovation attempts going on. So that this does look like one that's getting 100, even over 200 development activity submissions a day on its GitHub right now. And remember that the way we pull development activity GitHub submissions is we remove automatically the amount or any developments or submissions that are related to just like a Slack update or like a routine check that they put up on their GitHub. And it only looks at things that are legitimate submissions that equate to the project attempting to grow and innovate. So the fact that we're seeing 200 plus development activity submissions more or less on a given day is a very, very nice sign, especially in the last year. Let's take a look at like the last, I can't remember when Atom first started, but yeah, it looks like it's been around about 3 years. I'll switch to the 3-year perspective. And overall, this is a good sign, right? Because when it was first starting off and getting publicly traded in April of 2019, or March 2019, I should say, it was pretty small, relatively speaking. It was still getting developed quite a bit compared to most assets because it was seeing 50 plus development activity submissions a day, but it really grew here in July 2020. And you can see that price was reacting to plenty of things, not just development activity, but there was clearly an attempt from its coders to really renovate and improve the project. And it was getting even above 300 submissions a day at its peak in March 2021. So overall, just seeing this line, this overall trend line moving upwards, this is me arbitrarily drawing a line, but it more or less captures the trend that we've seen over the past 3 years. That's a great sign and indicates to me that the people behind Atom truly believe in the project. So it looks like a very good one, considering the fact that the submission rates on a daily basis are as high as they are. So that's the development activity side of things for Atom. As far as social dominance goes, for most altcoins, when we see social dominance spikes, that's a top indicator, because it means that people are typically talking about the asset due to a big price surge. You can see that that is definitely true here with the big spike that occurred in February 2021, correlating with a huge uptick in social dominance. Also, the all-time high that occurred here in September 2021 correlated with a huge spike. And even this one here, this was a relatively huge spike compared to where dominance was right before it. Right now, it's mostly
Brian,
stayed. Yes, hi, Max.
Hi. If I can add, spikes is one thing, but here on the chart especially visible, and this is how we use it often, divergence when the price keep pushing, but ideally both social volume and dominance, but depending on the mark phase. If the total social volume is growing, it can be growing for the project as well. Dominance is a very hidden gem metric. If it's diverging, price goes up, but dominance is not picking up, it's decreasing over time. And you can see it starting from, I don't see the date, March, I think it was March. Yeah, last year, March, May, yeah. All next subsequent top in Atom came with a lower dominance. Means attention of the crowd moved somewhere else. I'm afraid there's only way from here down. Yeah. It means now attention of crowd participants is somewhere else. Whatever it is, probably Luna. This is the next big top, and I'm thinking to write about it next week. And I'm looking there at the same metrics. I'm looking in the social dominance and social volume, and we might get divergence somewhere next week. Till now, it's still holding up. I'm talking now about Luna. But if I see the same picture, it's one of the strongest signs. You come, you push to the new price, whatever the narrative, but there is not enough percentage of the total crypto crowd following your ideas, narrative, project. And if there is no blood, there is no sustainable rally anymore. Crowd in crypto always moves to the next big thing. This is how it is. So using social dominance, in my experience, is best to spot this kind of divergences. Using social volume and strong spikes here, that could be also top indicator, but divergence or dominance is better to use as you've done properly in the long term. It should be like 6 to 12 months chart. And you see if it came to the new top, but the dominance not picking up or cannot break the previous high, that's it. You should consider exiting. Just wanted to add. It's important, and I'm using. And one another metric I'm using for the same purpose is Twitter growth 24 hours. It's quite often shows the same picture. Maybe you can edit.
Yeah, absolutely. Good point on Twitter growth. I think especially for non-ERC20s, it can give us a little added context into what's going on here. So on the Twitter growth end, it looks like we started getting data for Twitter beginning in July 2020. Huge spikes here right around the top. and then huge spikes here, relatively speaking, too, at this final local top here in January 2022, a couple months ago. And ever since then, we can see how Twitter growth has really fallen off, and it's gone back to the levels last seen in the summer of 2021.
Yeah. No new blood.
Yeah. So in your opinion,
normal.
Max,
I mean, yes, that's normal. If you ask me, of course, as always, not an investment advice, you should probably look for some other, or you wait till it goes down or stay on this level for some time. If you're considering buying, you go long. I mean, everything goes in cycles up and down. But as it is now, it looks quite toppish, and it doesn't look like it's finished its correction, if it's correction.
Gotcha. And just to clarify, the reason you think it hasn't finished its correction is due to the fact that we've seen its social dominance and its Twitter follower count decline, right?
I don't know. It's like two different things or aspects. One, you see what is the position, yeah, and you see, okay, the last stop was made on a lower volume, social volume in this case. So okay, so we should be in a corrective move, and it's one. And second, how long? And by the way, keep in mind that the timing this is the most difficult part, and actually very tricky. But you think, okay, how long has Atom been building up to come to the stop? And you say, oh my gosh, this is like a few years. And then you think, okay, is it like the last few months is enough or not? And based on it, second part, it doesn't look enough. And as you saw in the social talks, it's still quite high. So if any correction, I would expect like same like in the Bitcoin dominance, it just dies, almost dies, or like non-existent. And then say, okay, cool, it's quiet. People not talking, not asking. Then you come back.
Gotcha.
But by itself, Atom Cosmos, it's a very cool thing they're doing. Like we're not talking about fundamentals, we're talking about like behavior patterns.
Yeah. Yeah, I appreciate the contributions there, Max. It's a fascinating asset. I don't look at Atom probably as much as I should when it comes to analysis, but you know, especially seeing the development activity being very high and seeing its price extremes probably more volatile than the average altcoin. I think there's a lot of information that we can gather just based on the data that we do have on Santiment. So thank you to the individual or individuals who suggested this coin. Okay, why don't we move on to GALA? We'll see if we can do a quick Cardano analysis as well, and then we will call it a stream, folks. So GALA, as I mentioned, is an ERC20. So we've got plenty of on-chain and whale behavior type of data that we can look through. Let's look at just the last 6 months here. So circulation appears to mostly be a top indicator for this asset when we see extremes, like right here. This is a perfect correlation with the top. This, interestingly, like we had a little bit of a local top thing going on before circulation died down, and then there were probably several reasons why the price absolutely ascended over the next week or so. But overall, you know, when we see huge spikes like this, it does appear that local tops tend to form. Right now, circulation is fairly small. Not much to say about it other than it's in a wait and see holding pattern.
Brian,
yeah,
it was again a very nice example just how classically this big top was built. And we see again clear divergence. We keep pushing to the new highs, and every single new high comes on high circulation, but it gets lower and lower and lower. And then in the theory or like in the framework, I'm using usually 3 tops and 3 bottoms in crypto, at least so far, or like 3 pushes to each direction. And I'm pretty sure we don't do this exercise yet, but whoever is tracking this coin, you can apply directive addresses and network growth and trading, probably even trading volume. You will see a similar pattern. We keep pushing, but the amount of circulating token, amount of new money, amount of new addresses, everything keeps decreasing. Yeah. And I just wanted to say, because in my opinion, there are two most important skills in crypto. One is know when the top is coming, and second, keep teaching yourself spotting divergences. I've seen them so many times, almost no exceptions. There are very, very few exceptions where top comes without a divergence. And coming back to point one, spotting the top, this is the one which saves and grows your portfolio. If we cannot do it, we will be devastated and destroyed, and it feels bad too. And current circulation is low, so it's okay. I mean, buying on low circulation, it's not a bad idea. Of course, you are betting against the whole market, if the whole market pulling up or down. But at least you don't buy the top, so it's fine. But sorry for interrupting. It's,
no, I appreciate it.
For my eyes, just yet again over and over the same pattern. And I never use myself circulation for this. When I would say, okay, cool, so it works also in circulation.
Yeah, I like your concept of looking for the direction of those spikes and whether they're descending like this or potentially ascending like this, because it worked out perfectly in those two. I guess you could call it like triplet cases where these three were moving downwards. We had obviously a huge rise, but it indicated that the drop would be quick. And then here, the price was staying flat, but we saw 1, 2, and 3 all rising, and then we saw a big rise afterwards. So I like the concept of looking for the direction of those big spikes and whether they're moving up or down. I think that's a really cool way to look at things.
Yeah, it's just data. Few times when I was asked, can we use or should we use data for algorithmic or quant trading? My general answer was better not. It's data visualized in this way. It teaches you the underlying dynamics and rules of how crypto works. It has been working for the last 4 years, and I believe will keep working for the next years to come. Once you understand the dynamics, you don't need algos. Volatility or moves are so huge. Why do you need any algos? It's like it's typical and normal to have 5, 10x moves constantly, and you will get lucky sooner or later with your choice. So the key skill will be: do you understand enough of the dynamics, or do you understand enough before the pump happens, so that I have something in my pocket and I convince myself to exit? If you don't, it's heavy experience.
Yeah.
Grow 100 times and then lost 90%. It's very hard, but it will happen if you don't build the skill. And skill is not difficult. You just need to keep looking to the data in this visualized way over and over again, and it will come.
Agreed. All right, so looking at a few other metrics for GALA, we have daily active addresses here, more or less neutral. We had our big spikes here during the local top region in mid-February, but right now it looks to be dormant, still not back down to where we were in October, September. So that's a good sign that we're seeing about a little over 2,000 daily active addresses per day when we were barely scraping over 1,000 back in October here. So neutral to slightly bullish there in terms of the amount of utility on the address side of things. As far as MVRV goes, we see that we are in a pretty good spot. You know, we went to the MVRV model earlier and we're looking at, you know, how close we were to opportunity zones. GALA is certainly one that's in the semi to very much underbought territory, at least according to its 30-day. Because 15%, as we've talked about as a key to look at, is right there. And we are sitting just above it at negative 13%. So look for these spots where we're way below it, even here, and of course right here and here, as bottom indicators to really take advantage of. Supply and exchanges mostly moving up. Interestingly, we don't see this for a ton of projects, definitely less than half. But considering this one's moving up, I'd definitely call it a concern for GALA. We'd rather see it moving in the opposite direction, meaning there's less risk of a sell-off occurring on exchanges. But right now it appears that there is more risk of a sell-off. So keep that in mind and understand that volatility can be very prevalent while this is rising rather than falling. Okay, let me switch with prices sitting at about 21 cents right now. Whales are most likely to be sitting around 1 million. I would go only the 1 million to 10 million group, because 10 million to infinity is likely to include a lot of whales. GALA is very much centralized because 92% plus are owned by that 10 million to infinity tier, which includes many exchanges or just many key stakeholder addresses that just completely control the markets right now, compared to a lot of other assets. But on the 1 million to 10 million tier, which holds about a little under, it was a little under 4% and now is above 5%, we can see there's been a nice healthy rise. And look at how this was a great leading indicator, guys. I love this sign to show that this tier has some control over where prices go next. On November 12th, they were holding 3.6% of the supply. And by the 16th, 4 days later, they were up to just about 5% of the supply. And look at the big blast off that occurred just as they were starting to really accumulate. And it just continued because the percent held by this tier stayed high. And once that all-time high was established, they did start to take some profit, accumulated here, interestingly, on the semi drop-off. But obviously, we all know that through December and January, almost all assets were declining like this. So it wasn't exclusive to GALA at all, and certainly not the whale's fault that they were kind of wrong here in staying high and losing a lot of their value. They did take a lot of profit here and then start to accumulate beginning on the 28th. And they've been doing so ever since. So it's a good sign that once markets turn around, whales are going to be handsomely rewarded and likely push the prices upward, maybe a little more than a normal altcoin would be pushed upward. So nice sign on the whale end. I think that's enough for GALA. And I'd like to give just enough time to do a quick synopsis of Cardano, considering that was the winner of our Twitter poll. Let's take a look at the last year. And it's showing us that circulation is not too impressive. Looking at Maxim's suggestion of seeing like those triple spikes, it does occur that this was a nice leading indication that prices were going to move down. Of course, many assets had already been moving down by this point in September, but Cardano is one that's really been hit hard ever since hitting its all-time high on the 1st of September. Many other assets were staying up here still until mid-November when Bitcoin started to drop off. But Cardano did so pretty early on, prior to the rest of the markets correcting. So this would have been a nice telltale sign that the spikes were getting lower. Not even really many serious spikes to pay attention to, honestly. It's been mostly dormant other than this one big spike that occurred that probably was more of an anomaly than anything else. So not much to say there on the circulation side. As far as daily active addresses go, it does appear that we've had a little bit of a data loss, and we have been talking to our developers about getting the data up to snuff and complete for Cardano. So right now we're sitting with about a week delay in terms of what we know about daily active addresses, but it was mostly heading down before it cut off last week. So I wouldn't say too much about daily active addresses other than wait and see, since we don't have full data on it yet. MVRV also, I believe, is off for Cardano, so we're going to skip that for now. It's definitely in negative territory, though, I can tell you that much. Funding rate, let's zoom in here to pretty much just year to date and see how it looks. Mostly negative spikes. This line here is pretty much neutral, so don't pay much attention to that. Yeah, it does look like we've had a few significant negative spikes, which were decent bottom indicators, going here and here, and even back here in January and February, these, or late January, I should say, these were some decent bottom indicators where prices rose shortly after it. So it is a nice sign that we're seeing a little bit of shorts for Cardano. They aren't extreme shorts by any means, at negative 0.01%, 0.018% at the current standing. It's kind of a wait and see, but overall, I think this is a slightly bullish sign, considering people are continuing to try to bet that Cardano moves down further. Whale activity, we don't have complete data there yet, so I'm going to skip that as well. Network realized profit loss, we should have some accurate info for this metric, but it's mostly staying very flat at the moment. Look for, signs that things are spiking, like here as a local top indicator. It looks like it's been an okay indicator for Cardano, but not my favorite. And of course, famously, we've covered Cardano significantly for its very high development activity. On the daily chart, it looks like, consistently, it's still seeing almost 300 GitHub submissions a day, which is very, very good and near our leaders. It was at one point at the beginning of the year, seeing over 600 submissions a day, which we hadn't seen since last year in March. Zooming out though, like if we look at the last 5 years for Cardano, we clearly see that the trend is moving upwards. Going back to the beginning of Cardano's existence, it was getting 150 to 200 submissions a day, if that, probably lower if I averaged all these together, under 100 even. And overall, look at how it's just steadily risen, at least up until August, and it does look like there's been a downtick ever since. So slight concern there, but all things considered, when you're looking at a project with 400 plus, 500 plus submissions per day, it's a good sign that the coders are still actively working on the project and trying to make it better. Social dominance and Twitter followers, we'll just finish off with these here. Looking at the last year, the amount of dominance really peaked in late August, right before the all-time high. So this was definitely a nice leading indicator, telling us that things were getting pretty extreme. Almost 10% of discussions were related to Cardano at this time. That is massive, even for a top 10 asset like Cardano still is. And then we also saw the local top here perfectly align with that social dominance spike as well. All said, for now, social dominance is pretty much at a one-year low, where it's only being discussed at about 1.2% proportion to the rest of the top 100 market cap assets. Twitter followers, pretty much the exact same thing. Not quite perfectly aligned with the way social dominance played out, but you can see here, Twitter followers happened right before the local top in mid-May. Slight spike here in mid-September, and it's been just falling and falling with only 100 to 300 Twitter followers added to the Cardano Twitter per day. So overall, it looks like people have pretty much, at least recently speaking, they're at severe lows in terms of their interest toward Cardano, which can be looked in both a good and bad way, because sometimes these upticks in price can occur due to lack of interest, like we saw right here when everything was declining, and then boom, suddenly we have a blast off. But overall, I would use Twitter followers and social dominance in tandem with other things like funding rate and overall utility. And I think that would be your best bet to really time those bottoms and tops for Cardano. All right, so we're 24 after. I think this was a great call, guys. I hope you enjoyed it. We covered a lot here, I can tell, because my voice is a little bit lost now. Thank you to Max for coming in toward the tail end of the call and giving his thoughts on the markets right now. They're always extremely helpful for me and the rest of our community. For those of you who haven't checked out Sandbase Pro or even made a Santiment account yet, now's a great time to do so. We'll have some more promos coming up soon. And I definitely encourage you to just make a free account, because you'll get a week trial to see everything in real time, just like I'm showing here on my charts. And our Discord community is super helpful. Myself and our staff are readily available to help answer questions and spread the word, guys. Anyone can go to your account settings and generate a free referral link to share. Anytime you share a chart on Santiment, if you have your referral link at the end of that URL and someone clicks on it and ends up becoming a member, you get 25 to 35% of the cut of their first membership purchase. So note that. Keep an eye on the markets and all of the metrics that we talked about this week. I think, you know, as the real world news continues to progress, we didn't talk about it as much on this call intentionally because we really were covering it a lot, but in previous weeks. But if you keep an eye on that, it's definitely going to correlate with how markets continue to fluctuate. If fear starts to ease, that's definitely going to be a good sign for crypto right now, sort of, because it's pegged to the S&P. But if you see specific fear related to crypto, that would be a very good sign. If it's not also included to the S&P 500, we'll save that discussion for next week more. But just watch the real world news. Keep in mind many of the important metrics like funding rate, MVRV, and circulation, daily active addresses, and whale behavior in particular. And you should be able to succeed and continue to navigate these very volatile markets carefully. So for now, I'm going to sign off. Appreciate all of your time, and I look forward to any questions that arise over this next week here. Take care, be safe, and have a good weekend.
Thanks, everyone. Bye-bye.